don't have a cool background.
Yeah, you do. You can get one.
Yeah, I don't know
I'll make
how.
us smaller. So we are live. Just so you
Okay.
know. Thank you, Deetra. So today's House Calls podcast, myself, Chris Kamara, and we are going to be bringing you some content today. Chris is at a kid's birthday party, so he's not able to join us. Luckily, we have a good agency network or agent network that we all kind of chat together, and he was able to lasso Deetra Dixon in here today. Deetra, you want to do a little short intro of yourself?
Hey, thanks for having me. Yeah, I love insurance. Been doing it for over 20 years.
Yeah, right. Where have you done all of your insurance from?
Well, I started in Southern California, but I grew up in Nevada County, Nevada Union graduate. My daughter ended up graduating from Nevada Union. My parents still live in Penn Valley, so I'm really
You're in the community.
familiar with, yeah, Nevada County.
Yeah.
I live in Placer County now, but I go back and forth all the time.
Yeah, and so but you're not just limited to Nevada County. I mean, you're writing Potter
Oh, yeah.
County, you're writing San Francisco, you're writing all over the state.
Yeah.
Um,
Yeah, the state's huge. It's so diverse too.
right?
Yeah.
And so with you being all state, you're able to bundle home, auto, umbrella.
Um, yes, kind of.
Right.
Right now, as everybody knows, Allstate is on a pause, like a few other companies. We're crossing our fingers that that comeback date is sooner rather than later.
Yeah.
Everything's kind of being addressed right now with the commissioner and with underwriting, trying to figure out what the new rules are going to be when they do come back.
Mm-hmm.
But yeah, we're still strong with doing auto insurance and umbrellas and life insurance and all the other fun stuff as well.
Right. Well, and you've got that great product with Northlight, which honestly has been selling. It
Yes.
sold great. I want to say like 3-4 years ago. Um, no, seriously, it was good.
It was, I know.
I think it still is. I mean, it definitely has its benefits, to the right client.
It does,
Um,
it does, especially with the high value,
yep.
because since the FAIR plan only insures up to 3 million total insured value, Northlight will go way above and beyond that, and then we can also add in the ADUs where with the FAIR plan you have to have a separate FAIR plan for an ADU.
Yeah.
So Northlight really helps there, and in some areas it is much more price competitive too.
Yeah. And that's, I think, why you should always kind of check local, check with different avenues.
Mhm.
And I'm glad that you were able to kind of come on, and we'll we'll make sure we plug you more because we're taking care of this shirt. At the end of the day, that's, I think, what it's about, and I think you've got those great values, and
Nobody needs sleep anyway.
yeah, exactly. We can't help everyone. Okay, so Chris was able to greatly tag up this quick little sheet today, and what we're going to be going over. So, force placed insurance was his and mine. We'd kind of come up to wanting to bring that up because it's also in the community of an insurance. People are talking about it, wanting to know what it is, because the rumor, I think, has gotten broader from, just like, an insurance company saying that they can't place the coverage. So the lender obviously is the one that's saying you need to have insurance. And if you don't go out and get it, we'll get our own. So that's called force placed insurance.
Yeah.
And it's good. It's bad. I would say it's bad. I mean, I don't like saying it's good. It's, it serves a purpose, but there's many options in the open market that you can get to not have to go force placed.
Yeah, I would rather take a stripped down, bare bones FAIR plan than force placed insurance.
Yeah, definitely. And the other thing too that I found is, and I used to be in banking, so I, talked to some other people about it and seen some policies, but you will have a lapse of coverage. So they're not going to say, oh, go out and get insurance, and like you as the consumer go out and go talk to your lender and be like, I want to take what you have. Like, you have to basically not have insurance for, I believe it's 60 days before
Mhm.
they'll actually implement their coverage. So what are you doing in that time frame? You're not insured.
Right, you're not insured, and then even when you do wanna move forward eventually, maybe a year or 2 down the road, and get a regular policy, for instance, if you've got force-placed insurance and you decide to refinance, um, the refinance company is going to be looking for regular insurance. They're not gonna accept the force-placed insurance that's coming from the old lender,
Right.
and then the new insurance company is not going to recognize the force placed insurance. So they're going to say you have a lapse in coverage. And at that point, then you're even further limited.
Mm-hmm.
So you're going to be forced onto the fair plan because there's nothing else available for you.
Yeah. It,
So
I
it's
have seen
pretty
though,
dangerous.
it's dangerous. Yeah. I mean, and not only that, but you're now working with your lender for getting
Hmm.
recurrence of your payment and whatnot. So
Hmm.
um, that's kind of what it is. I mean, why do lenders do it? I mean, the only goal is to protect their financial interests. They're not there. The lender is not there for you. They're not trying to help you out at all. Um, and it's just usually following the collateral of the loan. I have seen some policies where you can kind of up the coverage. Um, Again, but there's a lot of gaps. I know there's no personal property coverage, there's no liability
Liability.
coverage.
Hmm.
Um, so yeah, it's just covering the dwelling up to the limit, definitely of the loan. So it's a safety net for the lender and not for you.
It doesn't even have rebuild, does it?
I've seen some be replacement costs, some be actual cash value. It's really, yeah, dependent on what carrier that they place it with
Hmm.
and what the policy terms are. But yeah, normally it is actual cash value on
Yeah.
that.
I've only seen one and it was years and years ago. I just don't recommend them.
Yeah, not at all. Not at all. So yeah, triggers for it would be lapse coverage. You either fail to make the payment, and that's where that 60 days kind of comes in. Your insurance drops you. So we've definitely dealt with a lot of that. Insufficient coverage. I haven't seen that where um, your internal coverage doesn't have enough, so the lender goes out and gets it for you. I guess
I haven't seen that.
depending on peril, I've had a client where they asked for the fire wind, but then now they're asking for water coverage too. So that's where that DIC coverage kind of comes in. Um, and then, or you haven't provided them proof of coverage. So normally we'll get a letter like whenever we are writing insurance and we get letters. What do we get? We get calls.
Oh, yeah. They send us
Um,
letters. They send the client letters. I get the freak out calls all the time.
yeah.
I just got a policy with you guys and they're saying that there's no coverage. I said, well, it's just a crossing in the mail thing.
Hmm.
But there are those great websites like mycoverageinfo.com that a lot of the companies participate in where the insurance agent can literally just go in there and upload the documents. And it's so simple.
Yeah.
And that keeps people away. I just had one yesterday. Um, I don't know why the documents weren't there already. They should have been mailed off a long time ago and it should have been updated. But I got in there, uploaded the documents. But when I got in there, I noticed that they did have the pending force placed insurance.
Oh, really?
There was a number on there. It had been a couple of months, so their other policy had canceled,
Okay.
obviously, because they didn't pay it. Um, and we had written the new policy in our agency, and we mail it was a Northlight policy. So we mail off the documents should have been mailed to Bank of America, and they weren't. So yesterday I went in and loaded them up. But in the meantime, the client got a letter saying, "Hey, we don't have any insurance for you. Where's your insurance? We're putting our own on there." So it had been a couple of months time frame, and I always tell people that, when you're switching insurance companies or anything like that, yes, we're going to write the new policy on the same date that the old policy expires, but your mortgage company got a letter 2 months ago saying
Yeah.
that you're being non-renewed. So for those 2 months they've been looking for insurance, you wait until the last minute to get your new insurance policy, they're going to still be looking for it, and if they don't find it, they're sending you this letter. It's just automatic. It's the law. They have to, check these marks and stay in
Yeah.
these time frames and everything. So it's not a freak out kind of point because it can always be fixed. The new insurance documents get uploaded. The force place sees that they had insurance, no problem. We're backdating and moving this off and correcting the loan. I did have one though that they did end up with a short lapse of coverage. It was like basically 2 weeks. So the
Yeah, I
mortgage
would say
company
like a couple
did
days.
charge them for 2 weeks worth of coverage.
Yeah,
So,
I've seen that too. It's like literally like a couple days. Sometimes they'll waive it to the cost depending on
mhm,
how much time it is. But yeah, they like you say they have to check their boxes. They have to make sure there was coverage in place during that time. If not, then yeah, the forced place coverage has to kind of kick in. Um, oh wow, just gotta love it. Let me see, extremely limited coverage. Yeah, we definitely talked about that and what it provides, what doesn't provide. Yeah, the living expenses, that's huge too. Of what's not covered.
oh,
Uh,
yeah, because if you're evacuated, you want that living expense because that's gonna help you, pay for your hotel room, pay for if you have a traditional policy, it's gonna help you pay for any unexpected charges because of the evacuation. You're evacuated, whether you lose your house or not, you're evacuated, you're not gonna have that coverage with forced place. You're gonna be staying at your kid's house on a couch.
yeah, you don't want to do that. No one wants to do with their kids. That's for sure.
Or your parents.
I think and I bring that up sometimes too, like in real world like scenarios of like going over coverages, and I'm like, this is what this is for. I was like, if you lost your house tomorrow, like where are you gonna go stay? And they're like,
Mhm.
oh, I'll go stay with my neighbor's friend, or my aunt lives here, and I'll go stay with her. I'm like, well, does she live in town? So if the town burns down, now where are you going? It's like
Right.
have to for it's unfortunate having to use that circumstance, but it puts people in that mindset of like, oh geez, like I guess I'll go live out of state, or that's kind of
Yeah, well,
peeling the onion on the client, like making sure that you're in their best interest and that you're getting them that coverage, because the loss of expense use is so minuscule. It's like
yeah.
$100 a year.
Yeah, the biggest thing is not just if you're losing your home, if there's a complete loss, but the evacuation. We
Oh
get
yeah.
those all the time up here.
Yeah.
And 2, what if it's just a partial loss? You
Mm.
know? My boss here, his garage caught on fire a few years ago. They were out of their house for a year.
Wow.
You know,
Wow.
there
That's,
wasn't a total loss,
yeah.
but, they had to go rent a house somewhere else. And then it's not just, I mean, we're talking traditional loss of use coverage, not the fair rental value, but,
Right.
it's not just the house that you're having to rent, it's the furniture that you've gotta rent.
Everything.
It's the extra PG&E bill, it's the extra all of that stuff.
Well, and your
So
mortgage bill too. I mean, you still got to
mhm,
pay mortgage on the
you
house.
still gotta pay the mortgage, yeah. So
It's all the expenses um, that kind of come up too. So, oh, he gave a real world example. This is cool.
I don't know,
So,
I can't
policy
read it.
lapses, lender force places, fire occurs, structural damage is covered up to the outstanding loan balance, lender's investment is safe, equity. What is this? In personal property or not? Oh, because your personal property is not covered.
Yeah.
Yeah.
So, you know what? All of those clothes that she spent years accumulating are now gone.
This is a pretty quick little, I mean, example. I like like you said, your boss's, example. He didn't have force place coverage, but that's
No,
where,
he
if
obviously
you
has the
have
Allstate
force place
policy.
coverage, you're not going to have those expenses paid for. It's
Nope.
all got to come out of pocket. So it's going to be coming up kind of quick.
It will end up costing you thousands more than it would have cost just to get the fair plan to begin with.
Mhm. So that's whenever you should kind of call your local agent. It's your primary advocate. I mean, I think I talk to people about items like this, even if they're not my client, just
Well,
because
yeah.
it's hard to get a hold of an agent these days.
I hear that daily. It's it 'cause talking to your agent, it's not just the bottom line. We're all concerned about the bottom line, how
Yeah,
much these insurance policies are costing us because it's expensive. Let's just, here's the elephant in the room. Insurance is really expensive right now. But you want to know what you're paying for. So I get it all the time. So, well, my neighbor's paying 1,200. Why am I paying 5,000? I said, well, let's look at their policy.
yeah. Your neighbor
You
hasn't
know,
renewed yet.
yeah, your neighbor hasn't been non-renewed yet. Um, but let's look at the coverage too. It's the same thing, okay, you're quoting me $5,000 a year, but this other insurance agency is quoting me $2,000 a year for the fair plan. Why? Well, because they've cut your dwelling coverage. You don't have any personal property coverage. You don't have any extended dwelling. They're giving you discounts that you don't qualify for.
Yep.
So you can't just look at the bottom line. You've got to look at the body and what you're paying for. And that's where you're going to get the meat of it. If you want lower coverage, great. That's fine, but know what you're getting,
Yeah.
you
Yeah.
know.
And I think depending on how low you go on even the dwelling coverage,
Well,
like I need something in writing from you because yes, you can underinsure your home, but you're also putting my job at risk whenever you're doing that, not
yes.
just yourself. So
Well, and if you're below a certain amount, you're not even going to get replacement cost.
right. Yeah. Reverts at actual cash value, which is amazing.
Yeah.
Not but I
I'm
mean,
sorry you're insured for $1,000,000, but your house is 2,000,000 to replace. So you're going to get 500,000 because that's what it's worth now depreciated. Here
oh
you
my
go.
gosh. Yeah, and that's kind of the huge thing, and that's why a lot of people and I heard like that their fair plan had mentioned something about with the whole roof thing and them trying to get that changed or fixed, but a lot of people don't know about that 25-year thing, and I think we've brought that up multiple times.
I get a lot of people are misinformed about the 25-year roof thing.
Mm,
I've had a lot of people say, well, if the roof is over 25 years old, I can't even get insurance. And I said, well, yes, you can. What it is if it's 25 years old or older, you don't get the dwelling replacement. It turns into actual cash value. So
right.
there's a miscommunication. There's a lot of miscommunication about the fair plan. There's way too much. We could go on for hours and just answer questions about the fair plan and straighten things out, and there would still be miscommunication about what it covers. And so I get a lot of people thinking that it only covers for wildfire, which is not the
Oh, right.
case. Not the case. Yeah,
Yeah.
they're like, "Well, I need my fire plan and my homeowners." Well, it's all homeowners. It all protects your home. It's just the different perils that it protects it against,
Yeah.
so
Um, yeah, maybe I'll pull up that sheet. We can just chat. I'm sure
yeah.
you go over that real quick too. Whenever you're talking to fair plan to people, but yeah, that maybe we should pull that up right now. Buying or selling, calling after big home change. Oh, this is calling us
Oh, yeah.
just in general. I think one got left off here, but yeah, buying or selling your home, no gaps of coverage, your renovations, depending on
Mhm.
what you're doing. This is for calling your agent. Um, Major upgrades, adding structures. Dieter, I'm sure you know what's missing if you want to chime in.
Well, I think it's on the next slide before you make a claim.
Oh,
Um,
no. Uh,
oh,
well, there's that too, but I was going to
yeah.
say trust. The whole trust issue where
Oh,
people
yeah.
aren't
Oh my
paying their
gosh.
trust.
I've actually added that to my, questionnaire sheet, but talk about buying or selling the home, the big one is the selling of the home. A lot of people think that when they close escrow, the escrow notifies their insurance that the house is no longer
Oh my
in their
gosh.
name.
Yeah.
And 6 months later, we'll be calling them going, "Hey, you're late on your payment." They're like, "Dude, I sold that house 6 months ago." And then we have to ask for all the documentation to backdate the cancellation, and then they go, "Well, why do you need to see my closing
Right.
documents?"
Why do you see the seller's
We don't
agreement?
care about how much money you made off the house. We just
Right.
want to be able to cancel it and get you some more money, right?
Yep.
Renovations and upgrades are definitely, they kind of go hand in hand, are definitely really important because, again, it goes back to the insured to value. You want to make sure that your home is insured for enough to rebuild it at today's construction costs. Um, and then
And
adding the
and I mean
structures.
too, like once you start swinging a hammer and you're maybe doing an addition, your home policy may not pay for any damage that you may do. If
Mhm.
you're adding a wing on and now you take out a wall and you're adding on, I don't know, a couple hundred square feet, and you are, say, some electrical stuff happens and causes a fire. Well, if they
Mhm.
see that you were, doing something under construction, you should have a builder's risk policy because you can get those for super cheap, like a couple $100 for $50,000 worth of work. And they're short term too, but
Mhm.
your policy may not respond. I mean, that's why you got to check with your agent because it may not respond to once you're under construction.
Yeah, super important. Or if you move out of it to construct, then it's vacant, then you have those issues
Oh my
too.
gosh, yeah, geez, and that's the thing. It's like anytime you give a carrier an inch to possibly deny your claim, they're gonna find it, or they're just. I mean,
Yeah, like,
I
"The refrigerator's been leaking for 10 years, I just noticed it." Yeah, that ain't gonna be covered.
but I would say like I haven't seen a carrier deny a claim for something like that. They're really just gonna cancel you. Like you misrepresented something.
Oh, I haven't seen the cancellations, I see more denials, and
Denial,
then
yeah.
and you get denied, and then you decide that the policy is too expensive or whatever, and you wanna go find new insurance. Now you've got a 0 payout claim on your policy.
Yeah. So now
So
you,
another reason, speak with your agent before
yeah.
putting a claim in because it might not be worth calling claims. Once you call claims, they're putting it on your record, but your
Hmm.
agent is gonna be a confidential conversation.
Yeah. I just literally just had someone call me a couple days ago, and they wanted to talk to me about that, and they're like, "Well, I just want to notify the carrier," and I'm like,
No,
"You're not going to make a
no,
claim."
please don't.
Yeah, like if you're not going to notify a claim, there's no reason to let them know because you're going to have like you mentioned, the $0 record
Mhm.
that could make you ineligible for a new carrier if and when a new carrier comes into the market.
And it also, let's say you're selling in a week, in a year,
Yep.
that could come into play with the new buyer
Hmm.
being able to find insurance too. So I know with bamboo, it's that way.
Yeah, you have to prove that it was the location and that wasn't the insured.
Right. It just takes more
Hmm.
stuff to do. And insurance is no longer, I mean, I remember the days where I would get a call and they're like, "We're sitting at the closing table right now. We need a policy." Sure, here you go. Yeah, can't do that anymore. Every once in a while, I get one down in like Roseville or Rockland or something. I'm
I
like,
mean, even
"Oh,
down
sure, here
there.
you go." But yeah, even down there, it's difficult. And people always say, "Well, I'm in a subdivision." Well, we've all seen the latest fire footage of subdivisions where the flames are coming right up to the back end of them
I feel
because
like
it's an open field.
there's been a few literally in the
Mhm.
past month
Mhm.
that it's been down in that area,
Mhm.
and all you need is the right ember
Yep.
to catch the fire. I mean, granted, there's been a few because of the Fourth of July stuff too, but
Well,
um,
yeah.
yeah.
And that's one of the reasons the carriers now, one of the pushes to start coming back is the home hardening, the 0 to 5
Yeah.
clearance, the boxed in eaves, the everything. We do a lot of education on that as well with our office. Um, William has been to the IBHS Institute where they study fire science.
Uh-huh. Yeah, we put
So,
that video up a
yeah.
couple sessions ago, and
Yeah.
that's just dramatic just to watch just two sheds, like
Mhm.
one just fully engulfed and the other one just it seems like it's fine, you know, and they had the fans going on it, and
Mhm.
I mean that's just another reason why you want to make sure that you're hardening your home.
Well, yeah, and another reason to harden and to be diligent about weed eating and all of that around it is because if there is a fire and you've got the fire trucks coming through there, if you don't look like you're taking care of your home, they're not
They're
gonna
gone.
care.
Yeah. Yeah, if they see
So,
that there's going to be a harder issue for them to fight
mhm.
your fire, they're and you know, and they're just going to let it go,
Yep.
unfortunately.
Yeah.
I should get a firefighter on. Just, I mean, not just have them say that, but I mean, I've heard
Oh, I've
them.
got a guy for you.
Oh, good.
I'll send you his info.
Yeah, that's true. Let me see. Golden rule: call your agent before you file a claim. Yep,
Yep.
that's it.
Auto
Um,
claims too. Any kind of claim. Call your
any
agent.
claim. Yeah, yeah, I would definitely
Especially
say that.
auto too. Yeah.
I was gonna try and pull up. I did have this pulled up actually. Bow, 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 bow. Let me share this other screen. We'll play screen sharing. If you had another second, I was gonna go to the comparison chart.
Oh yeah. That's good.
Window, share. So yeah, I go
Yeah.
over. I mean, I have this on my desk ready to go.
I do
Um,
too.
just so that way people can just see like what perils, like what perils we're talking about, and help to debunk the myth too.
And just so everybody knows, peril is the cause of loss.
Yes, that is accurate. So we've got
Oh,
fire
there goes
lane
fire trucks now. Oh no, that's the ambulance. Okay.
in Auburn.
Yeah. I'm right on Highway 49.
Oh my gosh. Let me see. So what else? Oh, and then so I like how it does the dwelling on the contents. That's nice.
Mhm.
Um, but that's where you can kind of show them. It's weird that they don't do
Well, they show you what a traditional policy would have, and
right.
then they show you what the FAIR plan has. So really, when you're looking at it, anything under the FAIR plan side that says no coverage, that's going to be your difference in conditions policy,
Why isn't that going?
or your
Where'd you go? Where'd you go? Is it still there?
yeah,
No.
I'm seeing it.
Oh, okay. I don't see it anymore.
Oh,
Um,
well, now you're scrolling down. There you go.
and so, and then a lot of these things too, like with the other structures, the fair rental value, ordinance and law, like whenever they're like, oh, well, I want to take that down. It's like, well, the ordinance law is mandated.
Mhm.
Fair rental value, I usually will go, I mean, I don't think I've ever maxed that out, but I always do at least 100,000, 150,000.
Yeah, I kind of take into consideration though what they would actually get paid out.
Mm,
Because then it's you're paying for more than the policy would even end up paying out. Because the way they my understanding is the way that they calculate the fair rental value payout is they
mhm.
take a look at the house and they go, "Okay, how much would this rent for fully furnished?" And that's what you get basically per month, and I think it's only up to a year. Am I correct?
Well, yeah, normally it's just up to that limit. Yeah, I don't know what the actual loss sustained is
Mhm.
on there, but normally up to the policy limit. And I want to say
Yeah.
it was 24 months. So,
24 months? Okay.
mhm.
I know some carriers are a year, some are 24 months if it's a catastrophe. Um, oh, I heard a ding. I thought Chris chimed in on that one.
He might have. I don't
He
know.
didn't.
No, jeez. Try to see if he was gonna.
Um, so yeah, anyway, I try to take that into consideration too. When I quote a fair plan though, I quote it as if it was a traditional policy with traditional policy limits.
Right.
And then, I work from there with the client, because every client, every homeowner is gonna have their individual needs. The
Yep.
most important thing is to have the dwelling properly covered, Everything else under that is going to be kind of personal for the client. Of course, like you said, the ordinance or law is going to be automatic, but when we're looking at personal property, the loss of use or the fair rental value, I always tell them, I'm like, look, this is what the coverage does. This is what it is there for.
Right.
This is what I would recommend, but it's totally up to you.
And I think I like that. I mean, I've always taken that approach as
Mm-hmm.
well, but I feel like it's lacking. Like, these realtors and just in general, like everyone's searching for insurance and, they're calling around to get a quote. But, that's where it's like, you got to really just fine tune who you want to work with
Mm-hmm.
and start digging with the fair plan then,
Yeah. I do a lot of education with realtors on the FAIR plan.
Mm-hmm.
I'm a big part of Placer County Association of Realtors, and we're also a big part of Nevada County. We actually just did a presentation yesterday at the Nevada County marketing meeting.
Oh, what do you guys
Um,
go over?
William is his new pet project is teaching about the home hardening and where he sees the importance of things and what needs to be done to be
Mm-hmm.
able to obtain a regular, the wildfire preparedness,
Mm-hmm.
um, but to be able to obtain a traditional policy once companies start coming back to more of a competitive market, what they're going to be looking for. So getting prepared now so that you're a better candidate to come back later. And
Yeah.
so we're really doing a lot of education on that, a lot of education on
Is
becoming a Firewise community.
I'm sorry to cut you off real quick.
Uh-huh.
Is IBHS or is Allstate and IBHS a partner? No.
Um, yes and no.
Okay.
And like I said, William's working very closely with the Allstate management
Uh-huh.
to see what's going to be coming down the pipeline.
Okay. That would be cool
So,
because right now it's like State Farm, it's Farmers, AAA,
mhm.
Mercury, USAA. I don't think that they give that great of a discount on top because I talked to someone through State Farm and it was only a couple percent.
Yeah, the Firewise discount is actually from what I've seen, is the biggest on the Fair Plan. But that being said, the Fair Plan's also got the biggest premiums. So of course,
Right.
the amount's going to be higher because you're looking at a higher amount to take off to begin with. Um, I think all companies are required to give those discounts now. It just didn't specify of how much of a discount.
Yeah.
So, Allstate has their discount, and again, yeah, it's a minuscule, but Allstate just recently, over the last 3 or 4 years, has been implementing inspections on all their current clients. And so there were certain things, that they would inspect and they'd say, okay, you need to do these things or you're going to be non-renewed.
Right.
And we were able to save a lot of our clients by walking them through the inspection and saying, okay, this is how you do it. This is what you need to do.
Mm-hmm.
So that being said, um, they've kind of pulled off of those, but we're we're a little bit more, I don't want to say privy, but just using those as an example, we can see ahead to what is going to be looked at, based on what the inspectors looked at on the current clients. So obviously, when new homes start coming back in, they're going to be looking at the same things. And Wildfire Prepared Home is a really good resource
Yeah.
in becoming part of that.
Yeah, I mean, it definitely follows the sustainable
Mhm.
implementation by the DOI, and
Mhm.
it's just like that. It's a foundation that carriers are going to use, seeing who's meeting this criteria and who's not, and they're forming their policies, like you're saying, to be around, providing that discount or not, and maybe even being eligible. That's a part that
Right.
maybe I'm kind of concerned about is whenever they do enter, they say, "Do you meet this? If not, we're not going to insure you."
Right. And so that's a big reason. That's the biggest reason
Yep.
to become a wildfire prepared home. And you know what? If you don't get accepted, if you don't get a new policy, fine, whatever. At least your house is then protected
Mm-hmm.
for your own peace of mind. And I believe to get the wildfire prepared certificate, I think it's a kind of a almost not quite a self-assessment, but they come out there. But it's 100, I think it's $125.
Yeah. And then you can
And
just
it's
go
good
on
for a
to,
couple of years.
right?
Yeah, it's cheaper than some of the other requirements that some other companies are telling you have to do.
Well, and I've heard from AAA. I've got a friend that works there. There, if you become wildfire prepared, you're almost eligible to be reinstated, and they'll give you this like several years of coverage,
Mm.
saying, "Oh, you can be covered. Like we'll keep you on for at least 2 years."
Well,
Um,
those are for the ones that haven't non-renewed already, which they pretty
right.
much non-renewed everybody already.
Yeah. So if you haven't been non-renewed yet, and
Anybody
then
that's left.
anyone that's left, and then you go out and you get wildfire prepared, you get basically a 2 year
Mhm.
pass of not being canceled.
Yeah.
Um, but yeah, you just go on to wildfireprepared.org and you fill out the checklist. There's an online quiz, and then you have a
And
third
you
party person come out there, and then you're done.
yeah, it's pretty simple. Um, and it's good to have and just get it and you're
Yeah,
ready.
you're ready.
Yeah.
Well, this has been fun. Let me see. Did I have what else did I have? Stop sharing. Go back to the PowerPoint. We kind of definitely. I think we ended with the key takeaways. What else? I mean, is there anything else that while I have you and I was able to get some of your time that you wanted to chat about, or something real
I
world
think
that came up?
I think that's it. I mean, we talked about just making sure that you know what your policy has in it and if you're insured to value or not. That's the biggest thing I'm seeing.
Mm-hmm.
Yeah.
Yeah, definitely. And that's just going over, why you should choose a local agent, why you should chat with a local agent. Not go over your realtor. I mean, it's great that you're working with a realtor, but at the end of the day, if you're buying, talk to a local agent, because they
Yeah.
have been seeing what's been going on in the market. They can see what maybe premium trends are going to be. Um,
Oh, Chris wants to know about auto insurance in California.
oh my gosh, what about it?
Sure, Chris, you can get full coverage.
Yeah, Chris can get full coverage.
We'll give you 30, 60, and $1,000 deductible on collision and comprehensive.
Yeah,
So, yeah,
Chris
auto
just said the other.
insurance.
What did Chris say the other day? He's like, "Oh, I probably used to have full coverage, like
Yeah,
back in the day. Didn't even know what full
we all
coverage
did.
was."
So, yeah, full coverage is making sure that you have liability, uninsured motorist, comp, collision. But, and what's the average price? Stop, Chris.
Okay, what's the
Um,
average? What's the price for an average home in Auburn?
it
Like
just
insurance price.
depends. You want to be
Insurance
North
price.
Auburn? You want to be South Auburn?
Yeah. What I would say, if you.
Further up the hill.
Well,
So let me tell you this. So Penn Valley. Okay. So I quoted a house in Lake Wildwood the other day. And Lake Wildwood is, as we know, a firewise community. They've got fire hydrants everywhere.
yeah,
The fire department's right there at the first gate.
that's a really good. Go keep going. I'm looking.
So I was trying to pull it up.
What?
The quote that I did.
Oh,
So this house, I quoted dwelling replacement 560. Okay, so the dwelling replacement was a little bit higher, but 566 for the dwelling replacement. Everything else was kind of defaulted regular coverage, $5,000 deductible, with the fair plan, $3,600.
mm,
Okay. Um, then Penn Valley still, and this one's on Spenceville, only a mile from the fire station in Penn Valley. 353 for the dwelling replacement. So 200 less than the Lake Wildwood house, and our fair plan premium was 4712. Due to the fact that no firewise community and no hydrant within 1,000 feet.
yeah. If you don't meet
So
the 1,000 feet, or you don't meet the 5 miles, your price is going up thousands, and that's either or, you know.
I was just looking at another house today, out off a dog bar, and I didn't see a fire station nearby. So the premium I quoted, it was a $730,000 replacement cost. The premium I quoted her was $10,000
Mm-hmm.
because the fire station was 8 miles away, and she says, "Oh, no, no, no." She brought me pictures and everything. She said, "No, here's the fire station, and it's a fully manned 24-hour fire station within 2 miles." It dropped it to
Yeah,
6,000. So $4,000 change because the fire station, it wasn't listed on Google because I go
which
in
one is
there
it?
and Huh?
Which one is it?
Dog Bar Higgins, Station
Oh
22.
yeah, so that one just
It
reopened up.
just reopened.
Yeah, yeah.
Yep,
So
that's what she
and I
said.
quoted a guy the other day, and he was like, "Oh, is that on there?" And I was like, "Well, it is now," and it saved him literally a couple $1,000s.
Yeah.
But yeah, that's the thing is that's why you should talk with a local agent because like some people, you know, down in LA, they don't know that a fire station just opened up or
Well, I
reopened or
didn't know
closing.
either, and I am local. I didn't know either, but I knew enough to be like, "Hey, this is why your premium's so high.
Hmm.
So if there is one, let me know." And she knew. So it's just asking the clients
That's
too, because
true.
we're not familiar with the whole county or the whole state. And Google's only so smart.
Yeah, that's true.
Just in Auburn here, we have, uh, up
Three.
on no, there's Lone Star. Lone Star shut down about 3 or 4 years ago.
We
It's
just
off
floated out some guy or some person out
Mhm.
by the golf course, and that's why their premium went up so
Yep,
high.
yep. So the insurance companies are just catching on that that one closed, and we've actually Allstate has non-renewed some clients out there because just because the protection class went up so high.
Well, and Aurora just
So
posted too about another county losing
Mhm.
their fire station. So
Yeah.
let him know it's going to
I
go up like 60% or something like that. So, we didn't. I don't even think we answered Chris's question. He was asking about the law of averages. Um, you know, I say you're going to
Mhm,
be paying between 3 and 5,000 if you're meeting both the hydrant and the fire station criteria.
mhm.
And then if you don't, you're going to be paying probably 4 to 8, depending on your value that you said. Um, geez, what else? I think that the coverage levels. I think that's basically it. You know.
Yeah.
Um, and
No,
then
Chris, Higgins is up there off of Combi.
I pulled up real quick the Firewise community
Mhm.
in our area. Well, at least in this is Roseville and stuff. But it's so crazy, you know, the saturation
Oh, yeah.
of through 80, you know, up 20, um, you know, the Grass Valley area. I don't even
The
like.
I heard that Nevada County has the most Firewise communities in the nation.
I don't know about. I mean, it definitely looks pretty saturated here, especially with the way all the way it goes up.
Yeah.
Someone told me like, uh, was it what's Napa? Maybe they don't. What's this county? That looks pretty like a lot. I mean, that makes sense.
It's the Bay Area, Berkeley, Oakland area.
That makes sense. Isn't that
Um,
crazy?
yeah.
Yet
Yeah,
we're
they're
paying
all
the
over.
highest premiums
Mhm.
of pretty much the entire state, which is crazy.
Yeah, but we don't have to have earthquake insurance, so
Yeah, that's always nice. Um, I don't have any other questions. Chris doesn't have
I'm good.
any questions. I mean,
Mm,
Chris always has questions, but
yeah. We just ignore Chris. That's fine.
Deetra, I want to thank you again for your time. I want to
You're
have you on
welcome.
again.
Anytime.
Um, there's always something to chat about insurance wise,
Oh god, yes.
and we just want to tell you know if you're watching this podcast all the way through and getting information, Deetra's great. She can be how can we find you, Deetra?
I'm in the Auburn office, so it's 530-885-8911.
Nice. We'll have to tag your info onto
Thank
our
you.
portal. or our little video or whatever. And then, as always, Chris, you can always find Chris Camara.
On a boat.
Yeah, you're on his page. You know him, you love him. And then East Main Street Insurance here in Grass Valley. We're here to answer your questions. We're here to help you. Just pick our brain. I think I was going to say just yesterday, someone called me and I was like, yeah, go to AAA. Like, they got better rates. They got better this. I'll go over your stuff. But, right now is the time of kind of helping navigate people because,
Yeah, definitely.
oh my gosh, it's nuts out there.
Yeah.
So,
I tell people, just if they have a standard policy, I'm like, just don't waste your time. Just pay the bill.
yeah, just pay it.
Sorry.
Maybe
Or here, you can do X, Y, and Z to it to
Yeah,
make it a little bit better.
tweak some
But yeah.
stuff, because people don't know because they've just let their policy renew for 4
Mhm.
years. So, get a third-party opinion from us or come to us for your insurance and we'll help you out. I'm going to
Yep.
end it.
All right, I'm gonna end it too because I got to get back to quoting.
Okay.
All right.
Thanks,
Thank you,
Deetra.
Ryan. I'll talk to you later.
All right.
Bye.
Bye. Okay, Deetra left. Did you have anything else, Chris? You're here. I don't know if you could actually call in. That would be kind of cool. Can you try and call in? Maybe we can hear you say something, even if there's kids in the background. See how that works with this new program, new system. I think all you have is chat. I think I was wondering. Nope, you can end it. All right. I'm ending it. Thanks, everybody, for your time. This has been Ryan Dunstan, Chris Camara, House Calls, and we will chat with you soon. Until next week.